Good day folks, it's Jim here from FX Charts. It's Tuesday the 26th of March. Well, it's been a day of consolidation and partial recovery in risk sentiment after the German IFO of business confidence came in slightly better than expected. So the US dollar is mildly softer, not helped by global yields, but elsewhere most products are pretty much unchanged on the day. Stock markets were a bit whippy but ended pretty much flat. And as I say, the US dollar is a little bit lower. One reason for that, we'll go and have a look at the charts. US government bond yields did head lower, and they're now down below 2.4% in the 10 years, as you can see, and probably look to be heading down to this 50% retracement level at under 2.3. So the daily indicators are pointing lower, and the weeklies are doing much the same, and as you can see, we've got this 50% level here at 2.28, and we've also got the 200 week moving average just here, which is currently at 2.35%. So it wouldn't surprise me if we could see continued weakness there, and it doesn't look particularly good for global rates. Elsewhere in the interest rate world, this is a chart of the difference between the US 10 years less the 3-month interest rate. So we're currently sitting at just under 0.01 points below par. So we do have a negative yield curve here, which equally doesn't bode particularly well for the global growth outlook. And so I think we need to be fairly nimble in our what we pick to trade at the moment. If this continues, dollar yen's not going to be looking good. Stocks won't be looking particularly flash either. Elsewhere on growth currencies, the Aussie probably is going to suffer, and the US economy is still in a better state than the European economy. So although this is not going to do the US dollar any good, I still kind of prefer it over the euro. Anyway, we'll go and have a look at the currency charts. Now, starting off with dollar yen today, this is a 4-hour chart. It's trying to recover off those lows, but I think if the current path for interest rates continues as I've just explained, the dollar is probably heading lower over time. This is buying us a little bit of time at the moment, but the dailies don't look all that happy. And as I say, I do think we're probably going to drift towards the downside. We're currently sitting at 110. I think if we saw it sort of head back towards 111 at any stage, you'd probably be looking to sell it into a rally with a stop loss above the 200-day moving average here, which is sort of 111.40. But on the downside, looking for a retest of these lows and possibly these lows. So that's quite a way off at this stage, but certainly 108.40s possibly within reach over the next few days, but we'll have to wait and see. We got the US GDP out on Thursday, and that's going to be the first big directional mover, I think, as far as the dollar is concerned. Elsewhere in the euro, okay, here we are with the euro. Now it's corrected up off its lows. It's sitting just above 113, having got up to 113.30 overnight. The 4-hour charts look pretty neutral. I suspect we're probably going to stay that way for much of the day. There's very little out of Europe at all, and the US though does have a fair bit of housing data out. That's going to be fairly important, and that will probably decide the direction of it today. But we have got a lot of Fed speakers and particularly ECB speakers due tomorrow, fronted by Mario Draghi, who's really been quite dovish, and I wouldn't surprise me to see the pressure return on the downside for the euro. But having said that, the dailies aren't showing a great deal of interest at the moment. Even so, I still like to sell it with a stop loss above this 100-day moving average of about 113.65. So sell into strength with a stop loss above there. The Aussie not doing an awful lot. It's a little bit higher today. Got down to 70.65 yesterday, and it's back up above 71, the figure at the moment. The hourly charts are looking mildly positive, but not doing an awful lot. The 4-hour charts are pretty neutral though, so I assume I think we're going to have a fairly range-bound day. and you can look to trade that in a sort of 70, 71.30 kind of range, I think. Elsewhere, stock markets. Yeah, stock markets had a bit of a choppy day. The S&P broke down through this trend line, rising trend line, but it got down to 27.85, but bounced into the end of the day. The 4-hour charts look pretty neutral at the moment, but the dailies do seem to be pointing lower. So as I've said before, I prefer to sell rallies to sort of 28.25, looking eventually for a test of the 200-day moving average down around here, 27.55, and below that, possibly down to the FIBO support 27.30, and then even towards 27 or 20 below 2700. But that's a long way off at the moment. If we could sell it above 28.25 with probably a stop loss placed above sort of 20 or above this level here, really, which is at, yeah, it's 27.60, 28.60, I beg your pardon. So selling it at 28.25, set a stop loss above there, but looking for a return back down to 27.5. Gold seems to be picking up a little bit of positive momentum. I'm not really sure how far that's going to take us, though. A lot depends on the strength or otherwise of the dollar. It's currently at 13.22. We could see a run up here back towards this high. I don't really think it's going to get there to sort of 13.45 or so. And it wouldn't surprise me to see a run back down here to sort of 1300. But essentially, it's choppy with a mild daily upside bias in the dailies. The weeklies are pretty flat, so I'm not. I think it's just going to remain choppy. And today, essentially, probably a range trade between sort of 13.30 and sort of 13.15 or so. Oil's kind of run out of steam, so I wouldn't be getting. Let me just get the right chart there. I wouldn't be getting too pulled either way on oil. It's at 59. I did like it higher. It's come back down. It's kind of stopped me out. The dailies are rolling over a little bit, so I'm losing a bit of enthusiasm there. As far as the FX crosses are concerned, I'm pretty neutral there. The trending table is fairly indecisive, so I think probably leave those alone. So all up, I'm kind of looking to buy the dollar, US dollar, against the euro and against the Aussie. I think the lower growth outlook will hurt both. But elsewhere, I'm a bit bereft of ideas, except for to say, as I said, sell stocks into a rally, but with a relatively tight stop. So that's about it for today. Have a good one, and we'll talk to you tomorrow. Cheers.